Hi and welcome. Let me quickly show you this tool. It's called a stock screener. I'm here on the FinViz webpage in the screener section. Tools like this help you to filter the companies based on the different parameters. In fact, let me give you a short example. You see, in the whole world there are a lot of publicly listed companies. Look here, it has more than 500 pages with 20 companies in one page. Quite a few, right? So you need to select just one or several based on your demands. You go for the size of the company. Let's choose large one. Then you select the country you want the company would be from. Let's go for USA. And then you decide that this company would share some profit with you, so you might want to receive dividends. You choose anything you like, let's say over 4%. Then you think that one of the industries or sectors might benefit in current political circumstances or conditions, and let's go for energy, for example. Okay, now based on your criteria that you selected, you shortlisted just 11 companies, and here you can compare them looking at their financials, looking at the valuation. Next step would be for you probably to identify what do these ratios all mean and how to read them and how to compare as well. So tools like these are really useful once you know what you're looking for. But the more important question is, how do you actually know what to look for? That's exactly what I want to talk about today in this video. Let's move on. So now that you have seen how this stock screener works, let me explain why it's such a game changer for me and why and how I even got to the point where I needed tools like that. When I opened a brokerage account, I didn't really have a strategy. I just started buying companies that sounded familiar, mostly the names from the offshore or shipping industry, just because that's where I work. I was not looking at their financials, was not analyzing anything. I was just checking the chart thinking, well, maybe it will go up. Back then, I didn't even realize how little I understood about the market. I didn't know the difference between a good company and a good stock. I was not following earnings, debt levels, or even trying to understand why the stock price was moving. If it was going up, that's great. If it was going down, no idea why. One of my big lessons came when I bought shares of a company called Seadrill, a Norwegian offshore drilling company. At the time, oil prices were high back in 2013, and offshore drilling was booming. And I thought, this company should do well. But I didn't look at the balance sheet. I didn't see how much debt they had. I even didn't pay attention to it. Eventually, the company went bankrupt and I lost almost everything I had in that position. That's when I realized, okay, I need to learn how to read financials, how to spot the risk. Also, I didn't think much about commissions or taxes. I was buying small positions through my bank, and the commissions were huge compared to the amount I was investing. And I didn't realize that you pay commission twice. Once when you buy and once again when you sell. Plus, if you buy a certain foreign stock, like from the United Kingdom or France, some Italy stocks, You might have to pay an extra tax just for the transaction on top of all of that. I also didn't understand the different types of stocks. I didn't know what growth stock or dividend stock really meant. I just thought, okay, I bought it. Maybe it grows, maybe it pays something. I had no idea about dividend taxes or what a dividend X date is, or why prices drop right after a dividend is paid. So all of the things I learned by making mistakes, not from a course, not from a book, but from seeing the numbers in my account going down and wondering, wait, what has just happened? So over time, I started to figure out what kind of companies I'm more comfortable holding. I learned to pay attention to market capitalization because small cap stocks move differently than large established ones. I learned that it's important to know if I'm buying a company for the dividends or for potential growth, or maybe both. So that's where tools like FinViz help a lot. Now, before I even look at the company, I can filter based on size, sector, country, whatever I need. And of course, nowadays we have even more options like ChatGPT or any other AI assistant where you can ask questions and get help digging deeper. But screeners are still a great way to quickly narrow things down. So, here is the point of this whole video. Whenever you add a company to your portfolio, ask yourself, why am I buying this? What do I expect from it? Am I looking for a stable income through dividends? Or do I believe in a long-term growth? Do I understand the risks? It doesn't matter if someone told you this stock is gonna fly. What matters is your own research. And when you open your portfolio and see a name there, you should be able to say, I bought this for this reason. And I know what I'm doing with this. That mindset, knowing why you hold something, makes a huge difference. Thank you for watching this video. Please hit that like button and subscribe to my channel. I appreciate it.